say I have, 200,000 to invest.
I have $10,000. I have $100,000. I have $1 million. What should I do with my money?
What would you recommend to me?
I would say study. There's advantages between silver, gold, and Bitcoin, and you've got to know the advantages and disadvantages. So, it doesn't cost anybody to study, but it's the most important thing you can do. So that's why I recommend listening to Stanford. The silver, I'm bullish on it because you can afford it today. It's $25. It's 50% of its all-time high. It hasn't moved. And green oil is coming in. That's why I would buy it. It doesn't mean you should.
So if you had the $200,000, which obviously you do, your biggest chunk would be in silver right now of those three?
I've already taken my positions. I've already accumulated. So I bought Bitcoin when prices were low, but I had to understand Bitcoin before I got into it. And I bought my first gold coin in 1972 in Hong Kong at Krugerrand. And I bought my first silver coin in 1964 when I was 17.
Wow.
I've been in it for a long time, and that's why I'm not bullish. I just love it. I am a capitalist. I am a hard money. I am not into socialist economics, which is Keynesian.
There was God's money, which is gold and silver, and then people's money, which is Bitcoin or cyber cryptocurrencies. And I really think it's important, especially for old guys like me, to understand the crypto world, because that's the world that's coming into view right now. And us real estate and gold guys are kind of being phased out. So in many ways, there's this battle on today between the old guys and young guys. And the old guys have got their heads up their butts. Like Buffett is anti-gold and anti-crypto. I'm going, give me a break. How can you be anti-something? You got to know the pros and cons of everything. He doesn't have to worry. He makes a lot of money. And then you have guys like Jim Rickards, a friend of mine, and he says crypto is dead. And so the reason I just love YouTube is I can crankle on there, I can search, and I'm looking for the other point of view. You young guys are so smart today. You're so far down the road when it comes to financial education, intelligence, but more importantly, savvy. You're aware, where the old guys are kind of closed-minded to your world. Look, you better check out this world of crypto, even if you're closed-minded like the old guys, all right?
So I think that what you've got to start with is whenever you look at financial markets, especially a kind of a macroeconomic standpoint, there's problems and solutions, right? And actually what ends up happening is precious metal investors and cryptocurrency investors, they actually agree on most of the problems, right? So there's no secret that, hey, look, if you print a lot of money, the currency gets devalued, right? There's no secret that there's high level of corporate debt and the federal balance sheet's out of control and all of those things. For the most part, there's agreement. So I won't spend a ton of time on that. The question then is, what do you do? Right. And I think that where there's agreement on the solutions is this idea of sound money principles. Right. And so whether it's gold, silver, or Bitcoin, they all have various aspects of sound money principles. The big question just becomes, gold has, let's say, 5,000 years of a track record. Bitcoin has 11 years. So, of course, there's going to be a hesitancy when it comes to something like Bitcoin. My kind of pitch to people is, look, the one thing that has an advantage, I think, from Bitcoin, or the most important advantage, is there's full transparency and the verifiability of Bitcoin. So you know exactly how much exists, exactly how much is being produced every day, and kind of the supply side of the supply and demand equation is known with 100% certainty. And so it's just a matter of generational divide, right? Older folks usually aren't used to kind of touching all the digital technologies. Younger people are. And so you kind of pick your asset, but they both have sound money principles. And I actually think both of them will do well coming out of this economic crisis.
So this is why I converted over to Bitcoin. This is my reason, and it was Anthony that cleared it up for me. Is that at the same time that the Fed is printing trillions of dollars, Bitcoin is tightening. So Bitcoin is getting harder, and the dollar's getting softer. Would you go into more detail on that distinction?
Yeah, so if you take quantitative easing, right, that is literally the Fed printing money and flooding the market with more dollars, right? It creates a higher degree or a higher number of circulating supply of dollars. So that's quantitative easing. Now, the opposite of that, quantitative hardening or quantitative tightening, would be them actually taking dollars out of circulation, right? And so what ends up happening in Bitcoin is something that looks like quantitative hardening. So there's 21 million Bitcoin that have ever been created. Every 10 minutes in the beginning, 50 of them were distributed into the circulating supply. That programmatically was cut in half 4 years later. So after 4 years of 50 Bitcoin every 10 minutes, it got cut to 25. It then went for 4 more years. It then got cut to 12 and a half. And just earlier this month in May, it went from 12 and a half to 6.25. So the way to think about this is previously, earlier this year, there was 1,800 Bitcoin a day that was getting created and entered into the circulating supply. Now there's only 900. So if you think about the opposite of quantitative easing is quantitative hardening, literally you're getting an artificially capped supply that is becoming harder and harder to get on a daily basis. And so as long as demand stays the same or goes up for that asset, the US dollar value should appreciate. And so the key piece to this, again, why are young people gravitating towards this asset is one, it's programmatic, right? Compare that to the Fed. People are betting trillions of dollars in the market on are they going to print more? Are they not? What's the interest rate decision going to be, right? All that kind of stuff. With Bitcoin, we know with 100% certainty what's going to happen. And then the second piece is that it's programmatic, right? So nobody can go in and manipulate it. And so in a world where any TV station you turn on, everyone's arguing over what the Fed's doing, right? In this world, nobody can manipulate the market, right? There's nobody who can change that programmatic monetary supply schedule.
Fed is centralized banking. So central is also communist. Command and control of a central government. That's communism. Whereas what Bitcoin, gold, and silver are, they're not controlled by anybody. So one of the reasons back in 72 when I started buying gold was because the Fed couldn't mess with it. They do mess with it to some degree, but they can't print a lot of it. And that's what I don't like about saving dollars. So explain why it's programmatic, but what I call it people's money, because there's not one person like Jerome Powell, the Fed chairman, can say today it's going to do this, tomorrow it's going to do that. It's already been planned out for years, right? Exactly how many coins are coming out.
Yeah, I mean, look, if you look at, let's say, the ECB Board of Governors, there's like 25 people that go in a room and make a decision, right? The Fed, I think it's, about 12 people go in a room and they make a decision. And so, I've got a friend who always says there's 12 people making the decision for a minimum of 330 million people's money, right? That just kind of doesn't sit well with younger people. And so when you look at something like Bitcoin, there's computer code that was written. That computer code can only be changed if more than 50% of the people on the network agree to change it. Now, as you know, when you have millions of people who are all trying to coordinate something, nothing gets done, right? And so that code's never going to get changed. It's going to stay how it is. And if there was a change, everyone would see it happen. So you not only get
completely decentralized.
Completely decentralized.
The old guy system is centralized, and a bunch of old guys control who gets the cash, right?
Yeah, and a way to look at it is the U.S. dollar is a sovereign currency. It's backed by a nation, and every nation has their own currency, and they're all manipulating them, right? We're seeing everything across the world. Everyone's manipulating their currencies. Bitcoin is the separation of state and money. It's the first time we've seen a currency, right, outside of something like gold, right, where now all of a sudden, no single country can manipulate the monetary policy. And so what I think is going to happen over time is every currency will be digital. There'll be a digital dollar, digital euro, digital yen, yuan, etc. So the technology will all be the same. The competition will happen at that monetary policy level. And I personally believe that the separation of state and money will become viewed as the superior monetary policy, just as gold for many, many decades has been seen as the superior store of value because of those sound money principles.
Correct. And the point here is we're going to go to a break, but there's a whole bunch of stuff got to understand here, is that when the United States comes out with a crypto dollar, that's the question.
I always borrow to invest. One of my favorite books that just came out was called Fake. Fake money, fake teachers, fake assets. I use debt to invest. But to be able to do that, to go to here, to get rich, to do that, you've really got to have a lot of financial education. I don't recommend it, but it's the best way to get rich. President Trump, my friend, we wrote 2 books together. I know some of you guys hate him. A lot of people hate the guy, but he's very smart. He's a capitalist. Obama, socialist, communist. Hillary, crook. So anyway, be very careful right now because I use debt, Trump uses debt. The more debt we use, the less tax we pay. That is why I love real estate. I can use debt, pay no taxes, make a lot of money. So that's really what I teach. I don't recommend it, but for those of you who understand what's called an infinite return, it's the best way to get rich, but you have to have a lot of financial education. So the reason the rich don't pay taxes is because there's 3 types of income. They'll never teach you this in school. The fake teachers will never. There's 3 types of income. Okay, number 1 type of income is earned income. That's earned income. It's when you work for money. It's earned. So that earned income shows up here. So these are the guys that pay tax. So when all the guys are screaming tax the rich, well, you can't tax them because they don't have jobs.
That's absolutely
It's kind of funny, isn't it? We're going to tax the rich. Oh, yeah. Good luck, And then the second type of income is portfolio income. And portfolio income is from flipping houses, or you buy a stock for like $10, you sell it for $20. That's portfolio income. Okay? I don't do that. Trump doesn't do that. So most guys who are flipping houses and all that, buying stocks and flipping you're getting this type of income. So this income is about 20% today. Something about that here. But the income that the rich work for is called passive income. Passive income is also known as cash flow. That's the name of our game, cash flow. And that income is income that's flowing from here to here. It bypasses taxes. So I know it doesn't sound fair, and it isn't fair. I don't disagree with you. But what's not fair is our schools, which are part of the problem, will never explain that. Our school system is so fake. It's more fake than those fake plastic plants there. And these teachers, bless their heart, they don't know any of this. And I really want to talk to you about the most important subject for all of us today, rich, young, poor, or old. It's called financial education. And as you know, our school systems teach us nothing about money. Nothing. It's pathetic. They have financial literacy courses today. Well, that's not financial education. It's really pathetic. And what's happening for most people today is, they follow that age-old mantra, go to school. What do you learn about money in school? Nothing. Get a job. Well, jobs are disappearing. Not only that, is that with artificial intelligence and G5 coming, more jobs are going to get wiped out. Plus, with driverless cars, more jobs are getting wiped out. So why would you go to school to get a job? And then work hard for money, but pay taxes. Taxes are going to keep going up, sports fans. They have to. Somebody's going to pay off this massive mountain of debt stacking up all over the world. And the only way they pay off debt is via taxes. And then they tell you to get out of debt. Oh, God. Debt is money. Please understand me. In 1971, when Nixon took the dollar off the gold standard, money became debt. So the rich know how to use debt to get rich. And that's what I do. My friend Donald Trump, I know some of you hate the guy. More power to you, But we use debt as money. And other guys will tell you get out of debt. Well, you choose. The rich use debt to get rich, and the poor and middle class get wiped out because they're in debt. That's because of the lack of financial education. And I tell you, invest for the long term in a well-diversified portfolio of stocks, bonds, mutual funds, and ETFs. The key word in there is invest for the long term. Why would you invest for the long term when they're printing trillions of dollars and ZIRP, zero interest rate policy, they're paying you nothing for your money? And you're going to hold for the long term, and you got HFT, high frequency trading. You know, they can trade 1,000 pieces of stock in a second, and you don't have a prayer. You're trading against a machine, a robot. So all this financial advice people are giving out there is a recipe for disaster. Again, this is my message to anybody, including millennials, is where is your head? You know, I know most millennials, they want a high-paying job. They want to be able to pay the rent, eat, and all this stuff. And then you dream of the big house, a nice car, and all that. But that's why 99% of Americans are broke, because their heads are in the wrong spot. So when I asked Kim if she would take an accounting course, it was just 2 days. You know, I wanted to see if her head could get into the asset column. That was the difference, wasn't it?
Yeah, and actually, it didn't happen right at that moment, but it's...
You fell in love with me?
Of course I did. Of course I did. But this started the journey on investing. This started the journey on assets. But I do remember the moment down the road where, just like everybody else, I was focused on the income column, get a job, get the pay raises. If you're an hourly wage, work more hours or raise your hourly wage. So I was always focused here. And then finally, this is after we'd actually bought some investment properties, the light finally went on, and I'm like, instead of focusing on acquiring income, what if we focus on just acquiring assets, that the assets go into the income column?
Like this.
So that was a huge shift in my mindset. And once that shift happened for me, I don't think about the income column anymore. I just think about the asset column.
And that's our game called cash flow.
Yeah.
The first way you understand risk is you look in the mirror. It's who's looking back at you. You're the risk, not the investment. For example, I invest in a lot of real estate. And say, oh, real estate is so risky. I think I'll buy ETFs. So you play it safe, but you'll learn more by investing in real estate, right? Because you'll make more mistakes.
Yeah.
So that's the difference there. So it's not real estate that's risky, it's your risk.
And sometimes it's ironic because I think about it like, so blindly turning your money away to someone you barely know isn't risky. Or let's say, I don't know, maybe just depending on this job where your employer can fire you any day isn't risky either. You know, it makes you think a little, what truly is risky for you?
Yeah.
How do you define it?
And you look at all the pensions of the school teachers, firefighters, and all the guys with 401ks. They're all bankrupt because Wall Street stole their money from them. You know? In the Federal Reserve Bank, they're run by PhDs, like my poor dad. And PhD stands for Poor, Helpless, and Desperate. The Fed has not been right in years. Everybody worships the Federal Reserve Bank. The other day, somebody says, what do you think about artificial intelligence? I said, oh, are you talking about the Federal Reserve Bank? You know? They're a criminal operation. They're the guys stealing from our pension system. It's horrible what's going on because we have all these PhDs, poor, helpless, and desperate people who are risk averse. Funny, isn't it? But let me tell you what risk is. So when you go to your banker does not ask you for your report card. So here's the cash flow game, and this is called a financial statement. What makes the cash flow game different from Monopoly, which how my rich dad taught me via Monopoly, is my rich dad also taught me about financial statements. So cash flow is the only game with a financial statement. So really simply, when you look at a financial statement, there's income, expense, assets, liabilities. There's one more thing in the cash flow game on the financial statement you'll see. It's the most important statement of all. It's called the statement of cash flow. It's off to the side. So if you're going to be an entrepreneur or a capitalist, you have to have one of these. If you're going to be rich, you have to have one of these. But 99% of all high school students leaving school and college have no idea what this is. You have FICO scores, but you don't know what this is.
No.
So when a banker asks you for your financial statement, they want to see how smart you are here. So let me tell you why school makes students poor. So really simply, it's this. Let's say I have a master's in arts, a Master of Arts degree, right?
Yeah.
Or a Bachelor of Arts degree.
Yeah.
Do I learn anything about income?
No.
What about Greek mythology?
Oh, there you go.
I
That's very
learned
important.
nothing about income. And we wonder why kids are leaving school, or young generation, looking for that high-paying job. But now let me ask you this. If you have a degree in technology, do you learn anything about assets?
Never.
So you could be a techie and you know nothing about this.
Yeah.
You could be a techie and know nothing about this. You see, when a banker looks at your financial statement, they're looking at the mirror of you. This is a reflection of you. And if you got Jack here and Jack here, then you're not that smart financially. So the reason the cash flow game is such an important game, it teaches you what is important to your banker or for a capitalist or for an entrepreneur, is an entrepreneur's got to know how to increase their income. And an entrepreneur's got to know how to create assets. If you don't know those two things, you should not be an entrepreneur. You should be an employee, which is why so many young people coming out of school have massive student loan debt over here, right? But they don't know anything about this and about this here. That's risky.
And we always have to find outside resources to like find this information, learn this information, you know, taking courses here at Rich Dad, learning through your seminars. And so it's really astonishing how something that's supposed to prepare you for the future leaves you with just the most important documents that we're told that we need to have are a resume and your report cards, your transcripts. But in reality,
if you're going to be an employee.
Exactly. But for entrepreneurship, which is what a lot of people come to us for, this is where you can learn it here, because in the school system you won't.
You see, if you're going to increase your income right over here, you need a real teacher. If you're going to acquire assets, you need real teachers. What is high risk is asking people who are fake teachers, like my calculus teacher and my accounting. You love accounting teachers, don't you?
I hate them.
Did your accounting teacher know anything about this?
No, nothing.
Did your accounting teacher know anything about this?
No.
That's risky. So that's why I wrote the book, Fake Money, Fake Teachers, Fake Assets. And what Wall Street is telling you to do was just give your money to them. That's risky. So the reason I say only lazy people use their own money is because it takes much more intelligence to raise capital. And so I've never been able, ever since my rich dad was a little boy, my rich dad forbade me from ever saying I can't afford it. He says, figure out how you can afford it. How can you do something? Figure out how you can do something. So over my lifetime, most of the projects I've started, I've never had any money. I like not having money because it forces me to think. I get creative. I have to educate myself. I have to talk to rich guys. Hey, how'd you do this? How'd you do that? How'd you do that? And what has happened to me, and I just turned 72, I've never needed money. Because if I need money, I figure out how to raise it.